Hi, everybody. Welcome to Friday's Focus on Finances. My name is Jamie Fleming, and today I wanted to share an article I read in Bloomberg about what you need to know about recessions, including whether or not we're in one. Just know, U.S. inflation is at a 4-decade high. Borrowing costs are surging and stocks have taken a huge beating over the last several months. With the Federal Reserve embarking on an aggressive campaign to temper demand and tame prices, concerns are growing that its moves will tip the U.S. into a recession. In recent weeks, there's been a plethora of discussion on whether a downturn is inevitable, when it might start, and how bad it might be. So first, let's look at what is a recession. It's often defined as a period when economic output contracts for 2 straight quarters. The National Bureau of Economic Research's Business Cycle Dating Committee, a group of academics whose determination is regarded as official in the US, defines it as a significant decline in economic activity that is spread across the economy and that lasts for more than a few months, and looks at 3 criteria: depth, diffusion, and duration. To assess these criteria, they consider factors such as employment, inflation-adjusted spending, industrial production, and income. And while each of the criteria need to be met to some degree, NBER says extreme conditions revealed by one criterion may offset weaker signals from another. For instance, the pandemic-driven recession of 2020 was broad-based and characterized by a sharp drop in economic activity, but it was extremely short, lasting just 2 months. The next area to look at are economists expecting a recession soon. Bloomberg economist says there's a close to 3 in 4 probability there will be a recession by the start of 2024. Economists at Deutsche Bank, one of the first major banks to forecast a recession, now expect one to begin in mid-2023. While Wells Fargo and Company predicts the same, Nomura Holdings expects one even sooner, starting maybe as early as the end of 2022. The likelihood of a recession could climb even higher if gasoline prices continue to rise and the Fed opts for another 75 basis point rate hike in July. When the central bank raised interest rates by that much in June, it was the biggest such move since 1994. The next is, could the U.S. already be in a recession? For Americans facing decades-high inflation, record gas prices, and ballooning grocery bills, it certainly may feel like it. But most economists say the U.S. economy is not currently in a recession. The government's hallmark measure of economic activity, which is gross natural product, or GDP, did contract in the first 3 months of this year, the first time it has done so since 2020. But the pullback largely reflected a surge in imports rather than a sharp slowdown in consumer spending. In fact, consumer spending rose at the fastest pace in nearly a year in the first quarter of 2022. Because GDP is meant to only capture domestic production, surging imports, a reflection of stronger consumer demand, drag down the headline figure. It's possible the U.S. economy will technically shrink in the second quarter as well, this time likely a reflection of slower accumulation of inventories, while consumer spending is expected to remain solid. That would mean the U.S. is officially, that wouldn't mean for the U.S. to be officially in a recession, though some politicians and commentators would surely claim that it is. Next is, can the U.S. actually avoid a recession? A recession is not a foregone conclusion, as the Biden administration has emphasized in recent weeks. Fed Chair Jerome Powell has held out hope for a so-called soft landing, a cooling in economic activity that doesn't lead to a recession, but acknowledged in June of this year that achieving one will be very challenging. Will it be a bad recession if we in fact have one? For the most part, economists are generally describing the potential upcoming recession as mild and short. Estimates vary, but the unemployment rate is expected to rise from nearly a 5-decade low to somewhere around 4 to 6%. That's well below the 10% seen in the wake of the Great Depression and the nearly 15% seen at the start of the pandemic, though it would still mean hundreds of thousands, if not millions of Americans losing their jobs. It's worth noting that as hard as it is to forecast when a recession will occur, it's harder to still envision what one will look like. Next is looking, is the global economy heading for a recession? The global economy is facing a similar picture of high inflation and increasingly aggressive steps by central banks to curb it. The world economy is in danger, as said by World Bank President David Malpass, declared in a report released earlier in June this year. He noted that even if a global recession is averted, the combination of high inflation and slow growth could persist for several years. Economists at Citigroup pinned the probability of the world economy falling into recession as nearly 50%. In Europe, European Central Bank President Christine Lagarde has emphasized a recession is not the central bank's baseline scenario for the Eurozone, but risks differ by country to country. Meantime, in China, the world's second largest economy, the outlook remains uncertain. The economy is showing mixed signs of recovery, strained by stringent COVID-19 measures and associated lockdowns, but the government is seeking ways to step in here. Now, with all this to be said, this is an even more important reasoning to have a solid financial plan in place. So if you don't have a financial plan in place, take advantage of our complimentary discovery sessions so you can see what your next steps will be and how you can help make an impending recession less effective in your own neck of the woods. So we want to look at, where should you be? Should you have, how much of emergency reserve should you have? Are you still continuing to put monies away for long-term and retirement, even during this volatile market? So take advantage of our discovery session. We'd love to hear from you and help you work through next steps. All right, everybody, thanks for coming, and we'll see you next week on Friday's Focus on Finances. Have a great weekend.